Good evening. Tonight we examine a growing trade dispute between the United States and Canada over a new digital services tax. Canada has introduced a tax targeting the revenue tech giants earn from Canadian users, aiming to ensure these companies contribute more to the local economy. President Trump has called this a direct assault on American businesses and threatened retaliatory tariffs, raising the stakes for both nations. The US and Canada share one of the world's largest trading relationships, so any disruption could impact jobs, prices, and supply chains. At its core, this is about how to tax global tech giants in the digital age, a challenge many countries are facing. Over the next few minutes, we'll break down what this tax is, why Canada wants it, why the US objects, and what it means for the future of North American trade. Let's dive into the details. Canada's digital services tax is a 3% levy on the revenue large tech companies earn from Canadian users, not on profits, but on gross revenue. It targets only the biggest players, companies with global revenues over 750 million euros and Canadian revenues above 20 million Canadian dollars. This means giants like Google, Meta, Amazon, Apple, and Netflix are in the crosshairs, while smaller firms are exempt. The Canadian government argues these companies benefit enormously from Canadian users and should pay their fair share. The current international tax system, designed for a physical economy, lets digital firms shift profits to low-tax countries, leaving Canada with little tax revenue. Canada's move follows similar taxes in France, the UK, and others frustrated by slow global negotiations at the OECD. With talks stalling, Canada acted alone, provoking a strong US response. The stage is set for a major confrontation. President Trump's response was immediate and forceful. He called Canada's tax a blatant attack on American companies and ordered an investigation under Section 301, the same tool used in trade disputes with China. Trump threatened tariffs on key Canadian exports, aiming to pressure Ottawa to back down. The administration sees this as a dangerous precedent. If Canada's tax stands, other countries might follow, targeting U.S. tech firms worldwide. Washington argues the tax is discriminatory, as it mostly affects American companies, and undermines efforts for a global solution at the OECD. The message is clear: target U.S. tech, and you'll face economic retaliation. News of the dispute rattled financial markets, stocks dipped, and the Canadian dollar weakened as investors feared a trade war. Tech giants like Alphabet and Meta saw their shares drop, as did industries vulnerable to tariffs. But the panic was short-lived. Markets quickly rebounded, hitting new highs by week's end. Investors bet this was more negotiation tactic than true trade war, recalling similar patterns in past Trump disputes. Strong U.S. economic data also helped restore confidence. The episode showed how resilient markets can be, even amid headline risks. Still, the threat of escalation remains, and businesses are watching closely. The underlying issues are far from resolved. For Canada, the tax is about fairness, ensuring global tech giants pay for the public services they benefit from. Canadian companies pay their share, so Ottawa wants a level playing field for its own tech sector. The tax revenue will fund digital infrastructure and innovation at home. The U.S. sees the tax as discriminatory, targeting American firms and violating trade principles. Washington insists the issue should be settled through global talks at the OECD, not unilateral action. The U.S. fears a domino effect, with other countries imposing their own taxes, leading to chaos and double taxation. Both sides see the dispute as a test of sovereignty and economic power. The outcome could reshape digital taxation worldwide. Experts are divided on Trump's hardline approach. Some say his tariff threats force countries to negotiate, as seen in the USMCA talks. Others warn this damages alliances and creates economic instability, especially with close partners like Canada. The dispute highlights the challenge of updating trade rules for the digital age. The USMCA didn't resolve digital taxation, and the OECD's global talks have stalled. How the US and Canada handle this could set a precedent for future digital tax disputes. The world is watching for a breakthrough or a breakdown. What's next? If the US deems Canada's tax discriminatory, tariffs could hit Canadian goods, steel, aluminum, even maple syrup or auto parts. Canada would likely retaliate, risking a cycle of escalating tariffs that hurts both economies and raises prices for consumers. A better outcome would be renewed negotiations. Perhaps Canada delays its tax in exchange for faster global talks at the OECD. A bilateral deal could also emerge, addressing Canada's concerns without targeting U.S. firms. The stakes are high, millions of jobs and the future of North American trade hang in the balance. This conflict tests the U.S.-Canada partnership and the rules of the digital economy. Will diplomacy prevail, or will both sides dig in? The coming months will shape the future of digital trade, and we'll be watching.